All right, welcome to The Explainer. Today, we're digging into a real economic mystery that unfolded back in the summer of 2025. It's a story that kicks off with one single jaw-dropping number, a number that sent shockwaves through the markets, ignited a political firestorm, and made 250,000 jobs just vanish into thin air.
This is it. This is the number right at the center of the whole thing, negative 258,000. You see, for 2 months, everyone thought the U.S. economy had added over 250,000 jobs. And then just like that, they were gone. Poof. Wiped from the official books.
So that's the big question we're tackling today, right? Where did all those jobs actually go? Was it just some kind of statistical weirdness, a flashing red light that the economy was in trouble? Or was it something else entirely, like some were claiming? Let's get into it. Okay. So to really get why this was such a massive shock, we have to rewind the clock a bit. Because before all the drama, in the early summer of 2025, the economic picture looked totally different. On the surface, things actually seemed pretty stable. This is the data that kind of set the stage. The first report for May showed a decent gain of 144,000 jobs. Then June came in with another 147,000. Now these numbers weren't, setting any records, but they were solid. They painted this picture of a job market that was just chugging along, holding steady. And this gave folks in charge, especially over at the Federal Reserve, a real sense of confidence. The story everyone was telling was that the economy was handling things just fine, no need to sound the alarm. But that whole story was about to get turned completely upside down. And then this happened. On August 1st, the Bureau of Labor Statistics, the BLS, dropped an absolute bombshell. Just look at this. That May number? Turns out it wasn't 144,000 jobs gained. Nope, it was just 19,000. And June wasn't 147,000. It was a tiny 14,000. You add those two revisions up, and you get a combined 258,000 jobs that were never really there to begin with.
And look, to be clear, this wasn't some tiny little tweak. This was the single largest downward revision to the jobs numbers in more than 10 years, if you don't count the crazy pandemic period. An adjustment this huge doesn't just change a spreadsheet, it changes the entire narrative of the economy. And it immediately lit a match.
So, as you can imagine, a data revision this huge didn't stay a data story for very long. It almost immediately exploded into a massive political fight. And the reaction was fast and it went straight to the very top. Just days later, President Trump fired the commissioner of the BLS, Erica McIntyre. He then publicly accused the agency of, and I'm quoting here, faking or rigging the data, basically to make the economy look weaker than it was. This was a huge deal, turning a statistical process into a direct attack on the credibility of a key government agency. But here's the thing, and this is really important to understand. Data revisions are a totally normal and necessary part of how this works. The first report is always just an early estimate. As more companies send in their actual payroll numbers, the BLS updates the data to get it right. It's a standard feature, not a bug, and it's all designed to get to the most accurate number possible. Now, that being said, the BLS was in a tough spot. For years, the agency had been dealing with budget cuts and staff shortages, which can really slow things down. Plus, the data depends on businesses voluntarily sending in their info on time. So the whole controversy really exposed these vulnerabilities and showed just how fragile public trust in the data can be when it comes under political fire. Okay, so this whole jobs mess, it wasn't happening in a bubble. To really get the full story, you have to look at another major economic pressure point that was making everything way more complicated for the people trying to steer the ship. And yeah, that other big pressure point was inflation. So just as the job market suddenly looked a whole lot weaker, prices for everyday people were still uncomfortably high, especially for certain things. And a big reason for that inflation? Tariffs on goods coming into the country. I mean, look at this. Apparel prices were up nearly 17% from the year before. Motor vehicles up over 8%. This wasn't just general inflation. It was targeted price pain you could trace right back to policy choices. So you can see how this put the Federal Reserve in a just impossible position. What do? Do you cut interest rates to help out the weakening job market and try to head off a recession? Or do you keep rates high to fight this sticky, tariff-fueled inflation, all while dealing with all this political heat?
They're really caught between a rock and a hard place.
And this basically split the Fed into two teams, if you will. On one side, you had the doves. They prioritized jobs, and they were arguing that the risk of recession was the biggest danger. On the other side were the hawks, who focus on prices. They were saying, no way, we can't back down on inflation even if the job market is slowing. There was just no easy call to make.
So, after all that, where did this whole mess leave everyone? Well, the controversy basically created a brand new reality, not just for the Fed, but for anyone who is just trying to get an honest read on the U.S. economy. I mean, it's just wild how fast everything unraveled. We went from feeling pretty stable in early summer to that massive data shock on August 1st, then the political explosion, and by the middle of August, there was just this widespread feeling of uncertainty. Nobody knew what to believe. It just goes to show you, trust is easy to lose and really hard to get back.
And what happens when people lose trust? Well, they start looking for answers somewhere else. Before all this, the official BLS report was the gold standard. It was the number. But afterward, you saw Wall Street analysts and economists start to look much more closely at other data, like from private payroll companies, trying to find a signal they could actually rely on.
And that's really the key takeaway here. The case of the vanishing jobs was never just about the jobs. The real story is about whether we can trust the basic numbers that tell us how our economy is doing and our faith in the institutions that produce them.
Which leaves us with a really tough question, one that feels more important than ever. When the official numbers themselves become a political football, how are we supposed to figure out what's actually true about the economy? That's the challenge this whole episode leaves us with. Thanks for joining The Explainer.